Folks, Newmont Corporation on Wednesday reported their third quarter financial results after the close of the bell. And well, let's just say that gold bugs had hoped for a more positive signal for the sector from the world's largest gold producer. It appears that all that glitters is not gold. Let's dive in. Okay, so for the third quarter, analysts had predicted that Newmont would record revenue of $4.6 billion, alongside earnings per share or EPS of 83 cents per share. Or was it revenue of $4.7 billion and EPS of 86 cents per share? Or maybe it was revenue of $6.9 billion and EPS of $1.30 per share. Pick whatever consensus you want. Whatever it was, the actual results that were put out by the company weren't that great, despite a rising gold price. Newmont in the third quarter reported earnings per share of 80 cents, based on net income of $922 million from attributable production of 1.7 million gold ounces. Something kind of odd out there is that the revenue figure was bizarrely inconsistently reported between journal shops, with the figure reported being anywhere from 4.6 to 4.67 billion in top-line revenue for the company. The actual figure, however, came in at 4.605 billion. Now, net income grew on a quarter-over-quarter basis from $853 million, an 8% jump, which was largely the result of the average realized gold price jumping from $23.47 per ounce to $25.18 per ounce, which represents an improvement of a little over 7%. Free cash flow, meanwhile, improved 28%, jumping from $594 million in the second quarter to $760 million in the third. Shareholders were rewarded with 9.4 million shares being repurchased since the last earnings release, of which 198 million was repurchased in Q3, while a further $2 billion in repurchases have been authorized to occur over the next 24 months. And they declared a dividend of 25 cents per share for the third quarter, bringing total returns to shareholders during the quarter to 786 million, which was actually larger than the aforementioned free cash flow value of 760 million. I'll leave you to decide how you feel about that. The gripe among investors, however, is the ballooning of the all-in sustaining cost of gold production on a per ounce basis. Last quarter, Newmont's AISC jumped by 9%, which the company partially blamed on higher third-party royalties as a result of rising gold prices. The company at the time guided that for the remainder of 2024, their AISC would sit somewhere near $1,400 per ounce, based on $1,900 per ounce gold. But gold has instead continued to climb, dramatically. Instead of declining, all-in sustaining costs jumped again in the quarter, climbing to $1,611 per ounce. Newmont wasn't taking a chance this time with their guidance, bumping their estimated all-in sustaining costs through the remainder of the year to $1,475 per ounce, which is now based on $2,500 gold, a $600 per ounce jump in assumptions from the second quarter. The company, meanwhile, expects to produce 1.8 million gold ounces during the final quarter of the year. Investors, however, did not take lightly to these costs. The reported AISC for gold was the talk of the town when it comes to the third quarter results, with Newmont stock also cratering over 12% as of midday Thursday, and it's still sliding as of the time of recording. So yeah, investors not a big fan of the results. Checking in on social media, the stock's performance certainly matches the mood. Thomas Wood referred to Newmont's earnings as a bad start to big cap mining's earnings season. Steve over here refers to the AISC as being just nonsense, while questioning future guidance. And Hubris Hunter views the costs as eye-popping, while income disparity seems quite level-headed, stating that it takes more cash to squeeze ounces from the depleting mines. And then there was the less than kind approach some investors took, calling the company clowns, crap-ass management, and the most mismanaged company in the world. And then there's my personal favorite from Eric Lickery, who had the most unhinged comment by saying that owning NEM is like covering your ass with honey and sitting naked on a red anthill. Sure, it's stupid, but you're connecting with your true feelings. Whatever that means. Amid all this, however, Newmont, to their credit, is working to right-size their operation following the acquisition of Newcrest late last year. The company during the quarter announced the sale of its Akim mine in Ghana for up to $1 billion in cash, while it also agreed to sell the Telfer mine and a 70% interest in the Haverian project for up to $475 million in gross proceeds. Newmont continues to expect to receive at least $2 billion in gross proceeds from divesting high-quality non-core assets, which is in addition to $527 million in proceeds from asset sales they conducted earlier this year. The company has also reduced nominal debt by $233 million at a cash cost of $210 million since its second quarter earnings release, bringing total debt reduction year to date to $483 million. So what are my thoughts overall on the quarter? Well, look, I'm just a YouTube guy, but the increase in all-in sustaining costs is obviously something we have to be concerned about if we are going to be bulls on Newmont. So the company is currently sitting at a forward PE ratio of around 11. Now, I look at this $2,745 gold price and the fact that they're changing their assumptions to $2,500 gold, and I think, yikes, how much of an impact is the current increase in gold really going to have on the overall earnings of this company? But here's the thing. The price of gold is up nearly $200 since last quarter. You want to multiply the 1.8 million ounces that the company's guiding to in Q4 times 200 and multiply that by 4 quarters, you're now at a $1.4 billion annual increase pre-tax in cash flow. That is approximately like 30 to 40% of what cash flow has looked like on an annualized basis for the last few years. Good times are coming for Newmont. God forbid gold goes 3,000, 3,200. The impact that that's going to have you're going to be sitting at a PE ratio of like 5 or 6. It's not unthinkable to think that the price of Newmont could easily double from here should gold continue to get this momentum. I know that the quarter wasn't great and the all-in sustaining costs are concerning, but ultimately this is a stock that's highly liquid. They are a major producer, and they're a name that if you are big into where gold's going and you want exposure to miners, I don't know how you can't own Newmont if you are buying that theme. It should probably be in your basket because the company has such a cheap cost of capital that they're going to be able to go buy production and go and buy great assets should we be a new paradigm where everybody wants to own gold. All right, everybody, let me know what you think of the quarter. Are you long? Are you short? Do you think that Newmont is a stock worth owning, even if you don't own it? Let me know what you think in the comment section, guys. Thanks for watching.